So first of all, today we have more liquidity, so the market moves in smaller moves in terms of percentage that like compared to like it used to back in 2020, 2021. And we also have more institutional players in the game publicly than we had in the past. And I'm saying publicly because I guess a lot of them, or even all of them, that are right now participating in crypto market publicly used to participate in the past, but more behind the scenes, like BlackRock, JP Morgan, Donald Trump, United States
Yes,
government,
yes.
China, etc. So we talk a lot in the markets and in technology and in business about innovation, finding a problem, solving it. And so many people, for example, now focus in AI, how it's gonna change the industries, take people's jobs or create new jobs, etc. But the reality is, for example, AI, it's something we used to have for decades. So it's not something new or something innovative. It's something that actually just got evolved over the years with the data we fed it. But blockchain technology, it's something that we've never had. And it's actually the solution to a huge problem, which I guess all of the viewers can feel and everybody had over the last decades, which is non-transparency, banking system failing, inflation, people having a difficult year after year go by financially. And also people want to participate in the financial market, but it was, and up to this point before crypto, way more difficult because real estate takes hundreds of thousands of euros or dollars in debt usually for you to participate in it. Stocks take thousands of dollars in order to participate. With crypto, anybody with any amount can start and scale from there if he or she has the right community, education, and expectations. I believe it's gonna be bigger in terms of price, market cap, and also in terms of normalization. And I believe we've all seen how they bring Bitcoin into our lives and they make it more normal now than it was back in 2019, 20, or even 17 when I first saw Bitcoin. And you may be thinking, okay, how are they doing this, Kyriago? I mean, we see Bitcoin in movies nowadays. We see blockchain, cryptocurrency payments in television, in football stadiums. It's not by mistake, it's not random. We see politicians like Trump talking about it almost every week. Even if he's bombarding other countries like an idiot, he still speaks about crypto. And this for me tells me something that there is something there. And in the end, because on how the technology behind Bitcoin, which is blockchain, is developed, again, it's the answer to a big problem we had with the financial system and banking system for decades. So if you have a solution on something such critical like the banking system, and banks, financial institutions are getting into it, so they recognize that it is the solution, and instead of them reinventing the wheel, they are using the solution that is already created. I believe it's going to be more in our lives. I believe in the future, like in 10 years, like you said, people will be using Bitcoin and blockchain and they won't even recognize, they won't even realize I'm actually navigating and communicating with blockchain technology. They will make it so normalized. But the ones who start with it now will get benefited the most. So, I mean, it's like you said, it's a lot of noise. And when it comes on projects like Bitcoin, Ethereum, nowadays, back in the day, yes, it was affecting them a lot, but now not really. And you may be thinking, yeah, but what if Trump posts a tweet? Yes, he technically posted on social media, but it's not the social media per se that affects the price, but it's the political fundamental aspect behind it, which is Trump. He just uses a different platform, Twitter, X now, instead of the traditional media. So when it comes on Bitcoin, Ethereum, XRP, Solana, social media now don't affect them a lot, like it was 3 years ago, 4 years ago. Now, when we speak about smaller market cap projects, yes, it affects them a lot. But again, it's like you said, it's noise.
Like
So
meme
myself,
coins, meme coins. It's only social media, I think.
yeah, yeah. I mean, I don't know how the viewers are seeing it, but myself, I don't trade or invest meme coins at all. Like maximum, I've invested like $100 in meme coins over the years, maximum, and it's not even a 0.01% of my portfolio. And the reason is because there is not value behind meme coin, and it blows my mind how people think, but they said they are gonna do that, they said they are gonna do this. And like if we see Dogecoin, for example, that most of the supply is held by Elon Musk, we all know that.
Mm-hmm.
He doesn't publicly come out and say it, but it's obvious. And he said for years that he's gonna do this on me with Dogecoin, he's gonna do that, he's gonna put it on, I don't know, in Tesla, etc. And my question is like, it's been so many years, why he hasn't done it? So yeah, meme coins are the most manipulative market. Is the market that is not gonna be here. Sub market in crypto. I don't believe we will have meme coins in 20 years. And I like most people lose money in meme coins. So I don't get involved in it. If there is no value or use case with meme coin with any market, I don't put my money in it. So it's a different value. But first of all, with Bitcoin, the value is blockchain because Bitcoin was the first crypto. So the value of Bitcoin in the beginning was the technology it is built on the blockchain. Which so now the value is a bit different, but let's discuss first the value that it was, which is decentralization. It's not controlled by one entity, a central bank. Number two, transparency. If a transaction is added in the blockchain, it is not changed. And this is so important because at least in Cyprus, we have so many, let's say, bad um, practices of the banking system. We have so many banks closing down, people losing their homes and staying homeless with the bank. So you don't have all this craziness and dirty work with Bitcoin. You know, a transaction is added, it doesn't change, and everybody can see it, everybody can access it. Number three, it allows people with not so developed banking system to actually get paid, send money, like in Africa, for example, or Latin America. Now, what is the value now? What's the use case now? Still decentralization. It's the only crypto that we really don't know who created it, who is behind. There is so many conspiracies, but you don't really know. And people say, what if he comes out and says, hey, I created Bitcoin and he proves it? Then Bitcoin will lose a lot of its value. And I don't believe he or she will ever do that. If he is alive, there are so many conspiracies around that.
Mm-hmm.
Um, so yeah, that's I guess the value that Bitcoin is bringing. And Ethereum is scalability. The biggest value of Ethereum, I mean, it's not decentralized. It's created by a company, but it allows developers easier than ever to build on it. Yeah, that's true. You know, a lot it is used by a lot of criminals. It is used by a lot of illegal organizations for illegal practices. But my answer is always, weren't they doing that with normal money anyway? And are they doing that still with fiat? So the question is not, Bitcoin is used by the black market, the terrorists. Euro is used by terrorists. USD is used by terrorists. So, and even if Bitcoin wasn't a thing, they would find another way to do their activities. So it is what it is. Yes, it allows them to operate their practices more freely, not so much because it's not regulated, but because it's transparent, anonymous, decentralized, and fast, which on the other side of the coin are the benefits of why it's growing so much. So that's where the question comes. What do we do for us to stay protected? What do we do to stay educated? And what the government is doing to make it more safe for us. It's never going to be safe. Euro is not safe. USD is not safe. Every day they call you for scams to steal your money. Every day terrorists are using those fiat coins for their activities anyway, and they are still like the currency of European Union, of United States. So it's not like Bitcoin or blockchain is bad or good. It's just that not good people are using it for their activities, like with everything. I mean, the biggest mistake is you said it yourself. They relied so much on social media. And okay, if it was 2016, yes, social media then was way stronger affecting crypto than it is now. Now, what I was always focusing on is price action, like learn how to analyze a market, learn and study the tokenomics and the facts behind the crypto project, find a trusted platform to trade on without a lot of slippage, without a lot of fees, without a lot of sketchy things that they do to take your money. And other than that, find a community that you can be accountable on every single day, communicate, grow as an investor, grow as a trader to be profitable. And the last thing, because you may be thinking, yeah, but is it only technical analysis? From my perspective, it's only technical analysis that moves the market, and then social media and news are just the excuse for the market to go where it was going to go anyway. But then you use the fundamentals, what they call it, the real fundamentals, not social media. Social media is noise, like you said. But the news when Trump sends a missile, when Trump posts something, when we have CPI, FOMC, NFP, etc., you use that to understand where the market probably will use that excuse to move. So he is affecting the market. We would be naive to say that he's not. Is he doing good on the market? I mean, okay, that's a different conversation if what he's doing is good or bad for crypto. But in the end of the day, he's doing what he was doing always, taking advantage of his influence to make money from a really promising financial market. Like his two sons, probably they became billionaires just because Trump became president, and they both did it with crypto. I mean, they made a lot of money, billions of dollars, with him being a president. So he's taking advantage. He's building the wealth of his family, that's for sure. So he's affecting the market, not positively. I mean, if you think about it, actually, because you said it in the beginning also that crypto are not so regulated, he's doing some positive news for moves for crypto, also like regulations, tax benefits to attract more investors. So that's good for us because for the market to move, we need money. And he's bringing the big players on the game. At the same time, with one tweet, yes, the market can do crazy moves and it's not ideal. But it's not always only good or only bad. Like we were praying and saying, oh, when are the banks and the big players will enter? At least that's how I was. So we can see the big market caps. And now we have them. But when you have the big players in the game, you also have their bad practices in the game, like we have in stocks, like we have in Forex. So you cannot have only the good. So you just need to adapt, adjust, and get educated more. What changed? You said.
Yes.
What changed? A good question. I mean, what changed is more manipulation. I mean, that's a fact. And you may be thinking, what do you mean more manipulation? And some people don't even believe in manipulation. I believe you're naive to think that there is no manipulation. Anyway, is when those big players move the market where they want it to move to take advantage the most out of it. And how can we stay protected is, I mean, it's simple, just understand their way of thinking. And we have so many people saying that I'm a smart money trader. And they all think that, for example, if you're a smart money, ICT, SMC, you trade like the banks. No, you don't trade like the banks if you don't have billions of dollars in your bank account. But you basically understand how most retail traders trade, and you probably trade different than them because most of those people lose money with the practices of the banks. And that's what you need to do in order to benefit from this market with these players now participating publicly. So regulations are a good thing because it becomes more normalized, it becomes more protected. It's never going to be full safe. Stocks are not fully safe. Forex is not fully safe. There are always scams, there are always brokers doing shady things, but it's more controlled. That's true. What you should pay attention to, number one, is taxes. What are they going to do with the taxes in the country you are? And if you can move, if the tax system is not ideal for you, that's a good move. Now, of course, if you have family and you cannot move, yes, you need to find other ways around it, which you need an accountant. And the second thing is see how that affects you. I don't know if there are countries that are still like negative with crypto and they want to create you trouble if you invest in crypto, but you should research. If your country is one of them, I don't know if they still exist, but I don't know the rules of every country, then you should be careful. Not invest in crypto, but invest in more careful ways. And definitely don't guys focus on small cryptos. No meme coins, no ICOs, not even small cap cryptos. And you may be thinking, yes, but Kyriago, those are the cryptos that will give me the 10x, the 20x. How much money you will lose until you have that opportunity? And is it really worth it? Like, if it's gonna take you to lose 10 times your money to make the 20x, but you can invest in Bitcoin and make a 3x and it's Bitcoin, like what's the best for you? For me, it's the second one option. I mean, definitely emotional decision. I mean, avoiding emotional decisions and taking decisions based on your strategy, as long as your strategy has a positive expected value. And which means if your average percentage per trade that you take is in profit, if not, like, okay, it means your strategy is not profitable, so just find a different strategy. But in the end of the day, like many people, what they lack is not that they don't have a positive, profitable strategy. I mean, most of them, they learn it from good mentors. The challenge with those people is usually that they don't follow the plan 100% because of the emotions. And if you change that, then of course you can accomplish a lot. So yes, non-emotional decisions is the key to be successful in trading. So I first focus on building their belief. For example, in our community, we have the fast start we call steps, which we teach them just how to take a trade. And then of course we give them their idea, I give them our ideas. So they start making their first profits, maybe in the first 10 days. And of course, the profits are always in alignment with your capital. So if you don't have a big capital, you don't have a big profit. But profit is a profit anyway. And what we focus first is for them to withdraw that profit. Maybe it's $20. And we literally go and tell them, hey, withdraw it, go buy something with it. And the reason is because most people are not profitable, not because they don't have a profitable strategy, not because they don't have experience, but because they don't have the belief they can become profitable. We shifted that perspective and that approach. We build the belief first because if you have the belief and then the discipline, making money in the trading industry, whatever market is, it's simple. I'm not gonna say easy because it depends on the emotional development of each person. And then we focus on futures, CFDs, actual trading, which is faster, and then on investing spot. Remove social media.
Really?
Yeah, I mean, because for example, now in our industry, it became so common, the so-called copy trading, and they all are looking because they are programmed with that philosophy to get rich quick. I mean, it's always what people are looking, but every 1, 2, 3 years, they promote a different garbage. The garbage, the scam now, it's copy trading. Put your money here, you don't need to do anything, and you make money.
Hmm.
And everybody's thinking, oh, I don't need to learn, I don't need to invest. They basically feed that addiction of people of fast money.
Like
And
dropshipping.
tell me again.
Like dropshipping.
Yeah, that's another thing. For example, in dropshipping, everybody thinks dropshipping is get rich quick. And I'm like, bro, dropshipping, you need at least 5,000 euros in a bank account that you're willing to lose to put in ads with the expectation that maybe your ads don't work, you lose that 5,000, but you have data now to market the next potential winning product in a better way. Like everybody thinks dropshipping is, the way to become rich. If you're not rich already, or at least having a big capital, dropshipping is not the way to go. But they promote it as such on social media, and that's why people have that perspective. So the hardest thing with that we teach our students is literally delete social media. Um, because the more you see, social media about crypto and forex, the harder it becomes for you to be successful. You see all these people with the fake live accounts, with the screenshots, the AI edited images of them making money, driving the Ferraris, Lamborghinis, the Rolex, and you think that's the normal, which I'm not saying is not possible, but it's not possible in the first month, first year, probably not even first decade, for example, to get a Lamborghini. And you may be thinking, yeah, but this guy did it. Do you really know what is going on in his or her bank account? Do you really know what he or she's doing in their life? Like in social media, they just show their highlights, and
Hmm.
most highlights they show are fake, like literally. Some of my past mentors that I thought they were like the best people, I learned a lot from them.
Hmm.
Most of them, and they ended up being fake, like literally
Yes.
fake. In overall, yes, the money I made with them were more than the money that I lost. But the many of the times you follow people and you don't really understand, or especially if it's the first time you get involved in some a market like that, you don't understand how to evaluate. So the biggest mistake that, for example, my first mentor, the biggest mistake that he was saying is to always invest all the money back to the business. That mentor was in business, my mentor in business. And that's a huge mistake because that's a completely wrong money management mindset to have. Yes, you invest back in the business, but you also need to have specific percentage for savings, specific percentage for more conservative investments and investments in general, instead of investing everything back to the business, because every business has ups and downs. And if you made a specific amount of money but you really didn't save anything because you invested everything back to the business, that's stupid in the end of the day. And I learned it the hard way. I made some really impressive numbers in terms of revenue, and I could have some really, really nice savings just from that revenue. It did, and also big investment portfolios. It didn't happen. So the next time I made the same amounts in the business, I learned to always invest, always save, always invest in more conservative ways, and then to the business also. So there is always three reasons why you feel negative emotions after a loss. And the first reason is you risked more than you were willing to lose. The second reason, you didn't know why you were how much you were risking, and the third reason, you didn't know why you were taking the trade. So whenever somebody may loses money in the market, that's fine because if you have, for example, a 60% success ratio, in order to have those 60 times of winning, you need to have those 40 times of losing. If you know your data type, you back tested enough, you actually know objectively that, okay, it's one of those 40 times. So you keep going and follow your plan 100%. Now, if you feel bad, my first thing I tell them is, okay, did you know how much you were gonna lose? And if they're like, oh yeah, I was thinking I would lose, for example, 100 euros and I lost 120. That's a 20% deviation. So you've calculated wrong your lot size, for example. Learn from that and don't do it the next time. Or if they're like, oh yeah, I didn't really calculated it, that's the mistake of don't know how much they're willing to lose. Now, if they lose 100, they knew they were gonna lose 100 and they feel negative about it, the second question I always ask them, okay, why did you take this trade? And if they have facts behind, I took this trade because 4 hours was bullish, they had a break of structure, break and close, blah blah blah. So they know why they take the trade. Then I go on, you're not ready to risk 100 euros, put it on 50 euros.
Mm-hmm.
So reduce the risk because if you know how much you were risking and you risk this correct amount, if you know why you took the trade and you still feel negative about the stop loss, you're not ready to risk that amount you've risked, even if it's a 1%. Because I have a lot of my students, they have like 10,000 euros in their live accounts, which technically you should risk 100 euros if you risk 1%, but they're not ready to see minus 100. And that's totally fine. You put 50 euros risk. If you hit stop loss with 50 and still feel bad, okay, put it in 20, 30 euros. And you may be thinking, but I'm not going to make money, Kyriago, with that risk. Probably you're not going to make serious money, but you're not ready to risk more. Do with lower risk. It's like a muscle. The more you do it, at some point you won't really care with 30 euros risk, and then you go at 40, at 50. As long as, of course, you are in between half to 1% risk. So the reason I said prop firms is because for those, first of all, for those who don't know, prop firms are companies which, in theory, they give you capital to manage, so you can trade bigger amounts of money without the risk of owing them money, and without the risk of putting your own capital to the game. And the reason I said prop firms is because, and it's these companies, they make most of their money, if not all of their money, from people losing the challenge. Now, what's a challenge? A challenge is like a practical exam that you need to pass with their qualifications in order for you to get the funding they will give you. And they sell this dream of, you're not making money because you don't have the big amounts. And people believe that. I was believing it for years. I was managing hundreds of thousands of dollars, but I didn't have live account. And there are so many reasons. I mean, we can have a whole podcast just for that, but I want to make it short. Number one, they put you limitations and rules whenever they want. And usually they do that if you're profitable, just to make you lose the account. And you cannot say, hey, this consistency rule, for example, didn't exist a year ago. I mean, it's their rules. Actually,
Mm-hmm.
you can read it in the terms and conditions. Number two, many of them, they do a lot of slippage, deviations to actually not have the proper statistics that you would have with a proper broker. And number three, you focus so much on, if I get funded trader with $100,000, my life will change. And usually it does change in theory, but until you pass that challenge and start getting paid with $100,000, probably you've spent thousands of dollars, which if you were to put at least half of those in a live account, you would start making money already without being funded. Yes, the profits wouldn't be a lot, but the profit is a profit. And the mentality with most people, at least that's how it was for me, when you lose an exam with those companies, even if you're profitable in your live account or statistics, you don't say, I lost it because I shouldn't trade news because they have one of those rules, don't trade news, and I did. You just feel I'm not a good trader. Our mind doesn't specify, doesn't logically explain why this happened. Our mind, it thinks simple. Our mind will say, I'm not a profitable trader. I'm not a good trader. And do that for 6 months, a year, your belief level goes to the trash. So even if you're profitable or you have a profitable strategy, you end up not being profitable because of the belief those companies built and you let them do it for you. Now, I'm not saying don't use prop firms, but what I'm saying, use them the right time, the right way, which is start trading on a live account, be profitable for 6 months on a live account with the proper risk management, then think to start paying for exams with them. And whatever amount you're willing to pay them, for example, I can pay 500 euros per month to get an exam, which is usually $100,000 funding. Buy a 50,000 funding and put the rest on your live account. With my students, I have a rule. Every time, whatever amount you put on buying a prop firm, put the same amount on your live account. And without knowing it, in 6, 10 months, a year, 2 years, you will have 10,000 euros sitting in your live account without even realizing it. 5,000. Yes, I used in the past prop firms since 2020. I'm more a funded trader in prop firms, usually in crypto, in Forex. I didn't find a good prop firm for my Bitcoin trading strategy. They think that because in the past crypto were doing huge returns without them realizing the market cap now is bigger, so the returns won't be as big. But at the same time, returns, even with Bitcoin alone, are still bigger than indices, are still bigger than Forex, than no, you cannot invest in Forex, than stocks, are still bigger than real estate. So you just need to have the proper expectations. You're not going to 10x your portfolio in a year. Like, no. But still, you can make more money than real estate or stocks. Start building the habit of making savings, putting money on the side to invest. Number two, find the right mentor to get educated from. Number three, find the right community. Usually, mentors have communities. If not, find a community to be part of, because trading and investing is a lonely road, especially nowadays where most people don't invest, don't trade. So if you're the only person in your family trading or investing, you are going to be alone. Um, Not that you cannot make money if you're on your own, but even if you're making money, I know people making even more money than me, like millions a year, or they don't have somebody to talk with. Like you see them, they are lonely. They have friends, but they don't have people around them in this for this specific niche
They don't
industry.
understand them.
Correct. They don't understand you. Yes, exactly. You can have friends, good friends, but they don't understand you when you get stop loss.
Mm-hmm.
They don't understand you if your portfolio is still in a drawdown or break even. So yes, and the last thing, follow what your mentor will tell you every single day for 1 year. But you guys need to always find the right mentor. I mean, I started more of a necessity in the Greek market compared to I wanted to do it because it's first of all, people think that, oh, you do the mentorship because you make money. Yes, of course you're gonna charge to mentor somebody because your time, and especially if you're profitable, probably you're gonna charge a lot. People need to pay to respect your time. If you don't pay, you don't pay attention. How I started now is basically I was a student in the academy that I learned trading from, and there was a huge need of Greek education, it was only in English, and of structured guidance. So I started kind of slowly translating things, showing on one-on-ones, one-to-twos, and long story short, that's when I built a whole system around it, organized things, put things in the same order. Like, for example, we discussed with prop firms. So many people teach to start with a prop firm immediately. That's a huge mistake. I teach things like that, which are big misconceptions to my students, so they avoid the mistakes that I've done in the last 9 years.